Hello. Welcome to the November market update. Hi, my name is Jonathan Campbell, and let's get started. So, I'm here to give you expert advice on housing. And I also just want to wish everybody a happy Thanksgiving. Hope everybody enjoys it with their friends and families. So, big question right now: what are mortgage rates doing? They have come down, and here's the answer: they have come down over the last 30 days. And this is what it actually looks like. So, as you know, you've seen it in the news, really month over month over month. It has been the highest year over year change in mortgage interest rates in the history of mortgage interest rates. You can see here that November 8th, literally almost just over a week ago, interest rates moved over 4.14% from a year ago. Prior year, 3.07%, 7.21 on average. You can see here as of yesterday, 6.64%. So they've actually come down almost a full percent to what they were just a week ago. So there's good news right now. Anybody that's looking to purchase a home, the rates have come down significantly since they did over the last 30, 45 days. And you can actually see this in this chart right here. As you saw, really since August of last year, rates have been climbing. And then just like I said, just this past week, they've dropped heavily, significantly. So we saw that big thing here. So that bodes well right now for anybody looking at a house, significant savings. So if you've been looking for a house really over the last 30 days, 60 days, talk to your agent that you're working with right now. Talk to your lender that you're working with right now and see what you can do right now. Your monthly payment that you were quoted before has significantly probably dropped with that. So definitely get a hold of either of those two as soon as you can. As you can see here, today's mortgage rates, 6.64% on average for a 30-year fixed rate. Obviously, based on your situation, based on your finances, things can change a little bit. But again, on average, about 6.64% in the mid-sixes. So like I said, came down significantly. Talk to your lender and your realtor. Another big question that we're getting asked right now is, what about foreclosures? We're seeing in the news that Amazon's laying off thousands of people. Meta just laid off thousands of people. Elon and Twitter, who the heck knows what's going on over there? But lots of people. In the news, you're seeing just layoffs. But what about foreclosures? What is happening like that? So right now, U.S. foreclosure activity continues to actually increase quarterly, nearing pre-pandemic levels. So what that means is we are starting to see an uptick in foreclosure activity. More notices are going out, but I can tell you it is at near an all-time low still of that. Right now, there is no foreclosure pandemic or anything like that. Right now, foreclosures are really almost at an all-time low. But at the same time, you are starting to see increased activity there. Prediction is that activity probably won't hit till Q1 of 2023. And who knows? We don't know. I have a crystal ball on that. But right now, U.S. foreclosure activity, it does say it has increased, and that has increased since really the last couple quarters. At the same time, it is nothing to be alarmed at right now. So another question a lot of people are asking right now is, I'm just going to wait for the home prices to fall. Will home prices fall? Again, we don't have an actual crystal ball here, but for those bearish folks eagerly waiting the home prices crash, you have to keep in mind, way as much as demand is pulling back, supply is as well reducing downward pressure on prices in the short run, meaning that not as many houses are on the open market right now. Not as many people are putting their home on the open market right now. Inventory is still very, very low. New construction home builders are not building as many houses right now as we speak. And you also have to realize, I'm in the state of Pennsylvania right now. We're dealing with the winter coming up and the natural slowdown that occurs in the real estate market in Q4. And then even in Q1 of next year. So right now, inventory is still very, very, very low, historically low. And I'm going to show you that in our local market stats. But when the market is low, again, supply, there's a lot of pent-up demand still backlogged. A lot of people are really just waiting for those interest rates to go. But at the same time, yes, there's not a lot of inventory that is out there. So here's a lot of home price forecasts for 2023 from a lot of the major groups like NAR, MBA, Freddie Mac, Fannie Mae, and Zelman. As you can see here, they're all over the place. Some people are saying that there's going to be some modest increases. Some are saying there's going to be some modest decreases. But at the same time, again, nobody has a crystal ball. But based on supply and demand right now, home prices are pretty darn steady right now. And actually in our local market, which I'm going to show you in a little bit, there's a big surprise I'm going to show you with the home prices. So big banks home forecast prediction, Goldman Sachs, Wells Fargo, Moody's, Morgan Stanley, all again, anywhere in those modest ranges, anywhere between 3 and 5 and 10% in price reductions happening really in 2023. But again, nobody has a crystal ball around that. I've seen things just like I showed you in the last one. I've seen increases, I've seen decreases. So, but again, inventory is so low. So right now, what's going on in Pennsylvania is showings are down about 20 to 25% from the beginning of the year. So you can see here, it's been a steady decline. We typically always have this steady decline, as you can see here, going into the Thanksgiving holiday and then obviously into the Christmas break here. But at the same time, showings have been slightly declined right now. A lot of that has to do with with mortgage rates where they're at right now. And then also the holidays coming up. The natural winter is upon us with home showings in general. So if you're a home buyer that's out there, there are some things that you can do to help you get in front of more houses. And we are still battling, and home buyers are still battling low inventory right now. So you want to expand your search area and criteria. Talk to your agent about what that looks like. Maybe you didn't think about a different school district. Maybe you didn't think of a different area that might be in that school district you're looking for. Maybe you didn't just realize of the different areas in the areas that you're looking in. The other thing is your criteria. Sometimes, depending on the layout of the house, a 1,500 square foot home and an 1,800 square foot home might actually look the same based on the layout. So you have to really measure your criteria. What does that look like? Number two is write lower offers to homes that are sitting. Home sellers that are out there, they might consider your offer right now, and you might be able to get it a little bit lower. I'm not saying just go in there and lowball, but you know what? Write offers on homes that you like. Don't worry about the price that they have it listed at right now. Homes are starting to sit a little bit longer. You don't know what the motivation truly is of that home seller. Your offer, write an offer that fits your budget. So get in there, write the offer, especially the homes that have been sitting there for 50, 60, 70 days. You're starting to see larger days on market. So write the offer that you feel comfortable with. Talk to your lenders about 2-1 buy downs and adjustable rate mortgages. These are incredible tools that are out there right now. I know a lot of people have a stigmatism about adjustable rate mortgages, but again, it's an option that is out there. These rates most likely will come down in the next year or two, like fully. And you want to be able to buy your house now, get into the place that you want to live. And you know what? You can refinance at a future date with that. So talk to your lenders about different programs like the 2-1. They even have 3-1 buy downs and the adjustable rate mortgages. They'll be able to explain all of that to you for that. So let's talk about our Lehigh Valley area, our local market right now. So right now, percent of list price received is a little down. So it's down to 101% on average. So again, that's what's crazy about this. Everybody thinks that things are just plummeting, yet on average, people are still getting, home sellers are still getting what they're asking for on the open market for their houses right now. So on average, 101%. Yes, is it not the 103, 104% that we saw earlier a couple months ago? No, but at the same time, people are still getting what they're asking for. Average sales price here, up over 10.5% from 2021. So you can still see here, home prices are still up from last year. Now, the thing that you're going to see here, though, is home prices are not what they were in September and August and July and June. So you're starting to see home prices coming down from the previous months. But year over year, home prices are still 10.5% higher. This is another reason why we don't have such a foreclosure boom. Many people have a lot of equity still in their house. And that's what you have to realize is that even though you might be struggling on a month to month basis, you might have unfortunately lost your job. You might be struggling with different things, groceries so high, all of that. Yet you still most likely have a lot of equity in your home. Again, talk to your local agent, see what your home would go for on the open market. If you are in that situation, again, you might be sitting on more equity than you actually think you might not be sitting on. Days on market, 18 days on average. So that has risen a little bit, but as you can see here, it's still relatively low. I mean, 18 days on average historically is still very low. We're not at those 100 plus days on market or anywhere near that. You don't see any spike. Because the inventory is so low, there is still pent up demand that is out there. Again, I keep saying it, but that's why the demand is still out there because the inventory is so low. If we were dealing with a market that had 5,000 plus homes in our local market right now, it's about 500 to 600 on average. Yes, it'd be a whole different conversation. You'd probably be looking at those 100 plus days on market. But again, on average, 18 days on the market. Inventory of homes available right now, 826. So as you can see here, inventory has been relatively steady actually over the last couple of months, August, September, October. But it's a slight decline, meaning not as many people are putting their home on the open market. Again, you typically see this in the October, November, December, usually in your Q4 and even early Q1, usually have a lower amount of inventory. Usually that spring market comes around and you see a big jump in inventory as many people are listing their homes in the spring. As you can still see here, very low amount of homes that are on the open market. Now, here's one that you're going to see is closed sales are down 29.1% from this time last year. As you can see here, month over month, home sales and closings are down. And again, one of the big reasons for that is the mortgage interest rates. As the mortgage interest rates over the last couple of months have really gone up, as you saw there, year over year, it's been the highest ever with the mortgage rates going up. But with that, because usually when you put a home under contract, it closes in the next 60, 90 days, you can see your home closings are relatively low from this time last year. Again, 29.1% down. And pending sales are down a little bit. Again, a lot of people just wondering, hey, what are interest rates doing? Should I buy a house right now? What does that look like? And here's what the Housing Affordability Index means. Or is. And right now it's at one of the all-time lows. And one of the reasons for that is we still have relatively high prices. So Housing Affordability Index means that what the average consumer can afford. And right now it's showing that homes are not affordable to your average consumer right now. Two things that couple that. One, we still have pretty high prices comparatively historically right now. You saw prices starting to come down, but at the same time, historically, they're pretty high. When you couple high prices with high interest rates, yes, you are going to see that monthly payments are not going to be as affordable as they might have been when home prices are either down or interest rates are super low when the prices are high. So we're right now we're seeing a low housing affordability index, which always begs the question of this, and this is what we get all the time: should I buy a home right now? And the way that we answer this, and I answer this to everybody, is what is your alternative? If you are looking to buy a home right now, there's a reason. You might have found that dream home you want. You might be in a situation, whether you're moving because of a relocation situation or whatever it may be, you need to upsize, downsize, whatever it may be. There's a reason you need to move. Or you just want to buy your first house. I always say, what's your alternative? And typically, your only other alternative is you can stay in the house that you're in right now, or you have to rent. But what is happening to rent? They've continuously increased. So as you can see here, not only have interest rates risen, but rents have continuously raised over really the history of rents. You can see here, and there's been a much bigger curve and increase really over the last several years here. But at the same time, rents have increased. So I always leave it with this: if you can find a house that meets your financial expectations from monthly payment and it is a good time for you to buy, then do not wait. If you wait for the prices to fall, but they never do, because again, nobody has a true crystal ball on that, you may discover the hard way that the house that you found a year ago and that you actually did love but passed up on is more expensive next year, and or completely not even an option because somebody else bought it. So I always say, if it fits your needs financially and you don't have another alternative that makes sense, why not buy that house? You'll be able to refinance it in the future if you want to lower your payment. But at the same time, if it improves your way of life and your status in life, why not buy that next house? What is your alternative? So strategy matters in this market more than ever. Make sure to reach out to your local real estate agent. Talk to your lender about what this market is doing. I hope this information finds you well. If you are in the Lehigh Valley, the Don Wenner team here is giving you a $5,000 bonus on any house that we buy in the next 25 homes. Right now, we've already bought about 8 homes over the last couple of weeks. So we are looking to purchase 25 homes by January 15th. Get your home information into us. Go to dwteam or dw-team.com, find the link, and then you'll get that get a $5,000 bonus if we buy your home. If you don't want us to buy your home, that's okay. Find out what all your options to sell your home is right now. I'll catch you guys in December at our next market update. Take care.